2022, Terra Luna collapsed. $40 billion gone in 72 hours. The dream of a decentralized dollar that didn't rely on banks died with it. Most people concluded it was just impossible. Well, Guy Young thought differently. The idea, he said, was right, but the execution was wrong. A year later, he built Ethena, and not long after, for quite some time, USDE was the third largest stablecoin in existence. Today, USDE has dropped down a bit to fifth place, and ENA, the governance token, sits 93% below its all-time high, with almost nobody talking about it. That's why I think there's a quiet opportunity lurking, and today we'll explore how Ethena came about, the tech, the tokenomics, the risks you must be aware of, and the millionaire math, of course. So let's get into Ethena. This is not financial advice, always do your own research. Right now, the two biggest stablecoins in crypto are USDT and USDC. Together, they move trillions of dollars every single year. But here's the thing most people don't think about. Both of them need a bank to work. Tether holds dollars in a bank. Circle holds dollars in a bank. That means if regulators come knocking, if the bank has a bad day, or if the government decides to freeze the assets, your stablecoins are at risk. You're trusting a bank in crypto, which kind of defeats the whole point. Guy Young saw this problem and wanted to fix it. He was a derivatives trader in TradFi, and he understood one thing very well: the cash and carry trade. You buy an asset, then you short the same asset on futures. The two positions cancel each other out, and you pocket the difference in funding rates. Traders have been doing this for decades, ages. Guy's idea was simple. What if you ran that trade on-chain, used it to back a dollar, and paid the yield directly to holders? Launched in February 2024, USDE keeps its dollar value by delta-neutral hedging strategy, mostly staking ETH and Bitcoin while simultaneously shorting that same amount on futures exchanges. Long and short cancel out, yeah? Dollar stays stable, yield flows to holders, and best of all, no bank is required. The market responded fast. USDE went from zero to nearly $15 billion in supply in October 2025, making it, at its peak, the third largest USD stablecoin in the world. Today, the landscape has shifted. DAI and Trump-backed USD1 have both grown, pushing USDE to fifth place. It currently holds $4.35 billion in supply, and Ethena's total protocol TVL sits at $5.5 billion. ENA, the governance token that controls the entire protocol, trades at around 10 cents with a market cap of approximately 900 million. Sound undervalued at first glance, surely, but let's dig deeper and get a better picture of it. We gotta start with the tokenomics, and here's what it actually looks like. Ethena has a fixed maximum supply of 15 billion ENA tokens, out of which approximately 9 billion are in circulation right now. The remaining 6 billion unlock on a rolling schedule that runs all the way through April 2028. Keep in mind, that's 2 more years of consistent monthly sell pressure that the market has to absorb. And unlike some other project, there is no active burn mechanism to offset that. For price to go up, demand has to consistently outpace that incoming supply, and that's a real challenge. Now, what about the value for ENA holders today? Right now, the token is primarily a governance token, giving you a vote on protocol decisions, surely. That's it for the moment, however. There is no active revenue sharing to ENA stakers just yet. What is coming, however, but not live yet, is the fee switch. The 2 thresholds required to activate it were both confirmed met in September 2025. A, USDE supply above $6 billion, and B, annual protocol revenue above 250 million. Well, the protocol has now generated over $700 million in cumulative revenue since launch, so the math is there. But the final governance vote to activate it and start distributing revenue to ENA stakers is still pending as of today. When that flips, ENA becomes a fundamentally different asset. But until it does, in my opinion, the tokenomics is still working against the price. Here's where the story gets genuinely interesting, guys. and that has to do with the ecosystem growth of Ethena. USDE is now deeply embedded in DeFi infrastructure. It is integrated across Aave, Pendle, and Morpho on Ethereum, and as of May 2026, a dedicated USDE market just went live on Camino, one of Solana's biggest lending protocols. For the first time, users on Solana can deposit USDE, borrow against it, and run leveraged strategies directly on-chain. Stargate Finance takes care of the bridging to Solana. Beyond Ethereum and Solana, the white label stablecoin product is expanding fast. Major partners include Jupiter on Solana, replacing $750 million in stablecoin liquidity. There are also Mega ETH, the Sui Foundation, and other ecosystems. Looking closely, Ethena is quietly becoming the stablecoin infrastructure layer for multiple chains simultaneously. On the institutional side, Ethena co-built Converge. That's an EVM-compatible Layer 1 blockchain built together with Securitize, one of the biggest RWA tokenization platforms in the world. A second product, USDTB, launched in partnership with Anchorage Digital, which is the only federal chartered crypto bank in the US. Now that positions USDTB as the first Genius Act compliant regulated stablecoin, and I say the first mover advantage is not to be underestimated in any field. The institutional commitment behind all of this is proper as well. Stablecoin X raised $890 million in total PIPE financing across 2 phases in July and September 2025. Their commitment is to hold over 3 billion ENA tokens, which is more than 20% of total supply, as a long-duration treasury position. We're getting closer to the Millionaire Math, but first we need to be straight about what could go wrong. The first risk with Ethena is negative funding rates. Their entire yield model depends on perpetual futures funding rates staying positive. In a sustained bear market, those rates flip negative and the protocol pays out instead of earns. Ethena, of course, has an insurance fund to absorb short periods of this, but a prolonged downturn could stress it beyond its limits. The second risk is custodial exposure. What on earth does that mean? Well, USDE's collateral sits on centralized exchanges to maintain the short positions. If a major exchange fails, like FTX did in 2022, Ethena faces direct collateral risk. Sure, the protocol spreads exposure across multiple exchanges, but the structural dependence on such centralized exchanges doesn't just go away. The third risk, which I mentioned briefly in the beginning, is the unlock schedule. 6 billion ENA tokens still enter the market through April 2028. That's 2 more years of monthly sell pressure, and it will be interesting to see how the market takes that. The fourth risk is regulatory. USDE doesn't hold bank reserves and it generates yield. And that combination makes regulators, let's say, uncomfortable. The USDTB partnership with Anchorage is a good compliance play, but the regulatory status of USDE itself remains unresolved. And finally, every yield-bearing product in finance carries the same core risk. The conditions that create the yield can change. Well, Ethena is no different. Anyway, that wraps up the scary part. So, as an intro to the Millionaire Math, let's look at the price history just very quickly. ENA launched in April 2024 and immediately spiked to its all-time high of $1.52. From there, it sold off through cycles alongside the broader altcoin market, hitting a low of approximately 7 cents in early 2026. Today, it trades around 10 cents, and that's roughly 93% below the all-time high. We'll use the current 10 cents as our reference price for the Millionaire Math, and let's start with the bear case, which spells 50 cents per ENA. And if you think that's already a lot, wait for the other 2 scenarios. 50 cents per coin means 5x from today, and that's market cap of $7.5 billion. To reach the million, you would need 2 million tokens, coming at about $200,000 today. Moving on to the base case, with a nice round $1 per ENA. Lovely sounding 10x from here at a price still lower than the all-time high. At $1, the fully diluted valuation sits at 15 billion. And the math is nice and easy. 1 million tokens for 100k today to bring you to $1 million tomorrow. Or the day after. Don't take my word for it. And at long last, here's my personal favorite, the bull case. One ENA token trades for $3. 30x return from today's 10 cents. That's a $45 billion FDV, implying that Ethena has become a dominant layer in the global stablecoin market. Buying 333,000 tokens for about $33,000 today will get you to the million later. Quite bullish, sure, but not disconnected from the scale of what a global synthetic dollar infrastructure layer could actually be worth. So what actually needs to happen for any of those price targets to become not merely targets, but real price levels? The first catalyst is already partially in motion. The Genius Act was signed into law by President Trump on July 18, 2025, creating the first federal regulatory framework for stablecoins in US history. USDTB, which, as we mentioned, is issued through Anchorage Digital, became the first stablecoin launched under that framework. But the full implementation rules are still being finalized by the OCC, with the Act not fully in effect until those rules clear, which is expected to happen sometime later this year. And when that happens, Ethena becomes the only DeFi native protocol with a product inside the federally regulated stablecoin system. The second catalyst is the fee switch. The thresholds are now met. The protocol has generated over 700 million in cumulative revenue. So, once the governance vote formally activates it, ENA transforms from a governance token into a revenue-sharing asset. The third catalyst, to the moon, of course, is called Converge. It's built together with Securitize and is designed to be the settlement layer for institutional DeFi, tokenized assets, on-chain FX, and compliant trading infrastructure. Once fully live and generating fees, of course, Converge opens an entirely new revenue surface for the new protocol. The fourth catalyst for ENA to move is yield. If perpetual trading rates return to the 15 to 25% annualized range that drove the early growth of SUSDE, then I expect a new wave of capital to flow into USDE. This means growing TVL, growing protocol revenue, and growing demand for ENA, of course, which will be reflected in the token price. We're towards the end now, and this is my summary of the key aspects we covered. Whichever way we look at it, ENA is 93% down. The tokenomics are still working against the price. The fee switch isn't live yet. And 2 more years of unlocks are coming, whether we like it or not. But USDE works. The revenue is real. And Stablecoin X put almost $900 million on the line, betting this goes higher. So from my perspective as a retail investor, I think ENA is worth considering. And now that you hopefully have a clearer picture of ENA, what you do with it is on you. And if you think my price targets are too overvalued, or perhaps too undervalued, or plain realistic, then let me know in the comments below. Hit the like button if this video was useful to you, and subscribe to the airdrops.com channel so you don't miss the next breakdown. I'm Stan, and I thank you for watching. See ya.